Last time on Learn from the Money Masters, our celebrity investor Blair McDonough met a master of money from one of Asia's largest asset management companies.
As a value investor, the price you pay is actually really important. That's one of the key determinants of your long-term return.
Brad taught Blair about shares, how managed funds can help him grow his wealth, and the importance of finding value for money to succeed as an investor. Get ready to learn from the Money Masters. Today, we're taking Blair to the Chinese Gardens in Sydney to meet another top money master, Kerr Nielsen from Platinum Asset Management. Kerr is a veteran of the investment industry, having founded his own successful company, Platinum, which now manages over $23 billion. He is one of our country's leading wealth managers in international investments. With over 40 years' experience in financial markets, Kerr is regarded as one of Australia's most successful investors of all time.
People think this is about spreadsheets, picking stocks and what have you. It's got nothing to do with that. It's about understanding a company and how it fits into its environment. Our central belief is that there's always part of the market that is out of favour. And often when they've lost interest in an area, it can become unduly cheap. And that's why you need to be aware of the heat, but you must also keep looking at the colder parts of the market, because that's where you often find very good opportunities. The stock market is this pool of opportunities. You can start with a very small amount of money. When I started investing at 13, I think I had a couple of $100, and I was able to trade and study what makes a company interesting. The matter of really leaning into a contrary view, leaning against convention. Look for exceptions, don't look for continuums. Look for why things change and follow a new direction. We're big advocates of diversification, whether it's medicine, whether it's technology, whether it's resources. And so by having a global portfolio, you can tap into each of those various things. We think that the whole of Northeast Asia and right through to India are in pretty strong markets. We use a lot of quantification, so we use a lot of computer numeric screening. And if you keep trawling through your data, you will be able to identify those persistent tendencies. It wasn't about targeting to make money or anything for ourselves. We felt if you looked after your clients, ultimately you'd do very fine yourself. So if we think that way, we can enrich society, we can liberate so many people. And though ingenious as that may sound, that was indeed our motivation.
We're catching up with Kerr to teach Blair the importance of looking outside Australia for wealth opportunities.
Blair, we're in for a treat today because I've organised a masterclass for you that I know you're going to learn from.
Okay.
This is Kerr Nielsen. I filled Kerr in that you were raised in Asia, so you've got a passion for Asia. Kerr has a very successful funds management firm that invests globally and has a dedicated fund in Asia. So Kerr, I talked to Blair about why he should consider investing outside of Australia.
We've got to decide to invest in shares in the first place.
Very true. No, that's the first beginning, and I think I'm slowly understanding the benefits of doing such a thing. Yeah.
And the problem we have when talking about investing in shares is that people feel they're intangible. They feel disempowered because they say, I understand property, I can touch it, I can understand the dimensions around it. Shares are a problem because they're seemingly intangible. There are a huge variety you can choose from. And then the last thing that really frightens people is the prices move up and down without rhyme or reason. And so what I try to do is remind anyone who has the patience to hear that companies are at the absolute center of our economic system. They are the things that create jobs.
Yeah.
So it is very, very tangible when you think in the whole. And then when you think about individual companies, it also is very tangible, like you probably use Facebook or Google or something. And so when you start thinking internationally, you do get all these choices. And then you need some grading mechanism to be able to choose which ones you want to own.
Yeah, and that's where the
common man like me is like, I haven't got the experience or the knowledge to do that. And
Yes.
would I take such a risk? It's about that analysis within that builds the trust in that company to then look at it and analyse it deeper.
But it's difficult to build trust because you'll come into a fund, the fund may go down in price, and then you'll have all sorts of regrets. And so you can't rely on trust, you have to have understanding.
Okay.
And so the understanding comes from this first notion that businesses are there, some are in the ascendance, some are in decline.
You get quite emotional about it too because
That's the danger. That's the danger. A good investor tries to reduce that.
Emotion is the enemy of buying shares, right?
Yes.
Because people usually sell at the worst time based on fear.
You know, individual companies can get into terminal problems, and that's why a portfolio is important.
Right.
But the main point is it's not eggs in one basket.
Right, yes. And that's been my thing as a property investor, a traditional Australian property investor. I do feel it in my time of life that I am becoming a bit too narrow in my investment strategy, I guess, and hence working with something like this is a good idea. But I want to ask also, you're more of a global situation instead of looking just on Australian soil. You deal a lot in Asia, is it?
Yeah.
So what's your interest in that and why did you go there?
So right now, you know, the most favoured market is the US, and it's very thoroughly owned and the valuations are very high.
Okay.
They can persist like that for quite a while.
So is that bad value then, do you feel?
In many cases, it's not great value anymore. So when we look at Asia, which has a history of growing faster than the Western Hemisphere, the value is incredibly interesting in relation to their growth rates.
Right.
Even though most people want to own the Western markets, we'd prefer to own the Eastern markets now.
So, Kerr, when you're overlooking in, say, China, tell Blair about a couple of companies that you find are interesting because it's so different over there than here. Yeah. Talk to Blair about a couple of those opportunities so you can get a sense of how Kerr and his team are looking at these companies.
The internet companies are really world leading because they jumped the barriers because they didn't have credit cards, they didn't have receptive banks, you know, really aggressive marketing banks. It was all about lending to state-owned enterprises. So they've formed these mini applications on a platform where you can do everything. You know, WeChat, you can make payments and so on. And they've got something like 500 million people using their phones to make payments. And so this is the sort of opportunity we can see where you make the presumption that everything's going on in Silicon Valley. So that's what's exciting to us, that there's lots of things happening and everyone presumes it's all about cheap plastic goods or something, but that's not the opportunity.
Kerr's passion is companies, and I love hearing you speak about them because, you know, Kerr said to me, a company is a living organism. You know, I love the thought of that because I run my own company, and if you think there's a person in every one of those businesses just as passionate about their business, and Kerr's job is to go and find out, and his team, what makes them a great investment. That's not broking, which is the popular view of investor.
That's a nice
Very
point.
different.
Because broking is why you're a salesman, you're trying to get a trade out of an institution or private client. So you're on the phones all the time. You came into our office, and it's a complaint of some of the recruits we have who says, this is so quiet. You're focusing on the businesses you're looking at. So it's not about putting on buy and sell orders. That's not the game. The game is to understand what are you really buying.
Well, Kerr, thank you for spending time with us.
Thanks, Bill.
Thank you.
Thank you very much.
If you want to learn more with Kerr, head to theinvestmentseries.com.au, where you can take Kerr Nielsen's masterclass or download our free ebook on becoming an investor from leading advisors. Next, we're putting Kerr's wisdom to the test as he faces the guardians, the gatekeepers of the investment industry. Blair's had the opportunity to meet money master Kerr Nielsen, one of Australia's most successful investors. Now, we're putting Kerr's investment ideas to the test as he pitches his approach to the Guardians, the heads of the top investment research houses in Australia. They are the gatekeepers of the investment industry.
Good morning, Guardians. Thank you very much for inviting me here today to tell you how we at Platinum Asset Management go about looking after people's money. Contrary to what you might think, investing is not exclusively about manipulating numbers. It's importantly about understanding human behavior. And there are indicators you can trace that can allow you to see where markets are and where sentiment lies in companies, sectors, and for that matter, markets in general. Over many years, we've built a deep knowledge of markets. We spend a lot of effort on training, and when we apply analytical tools to all of that, the consequence is that over the last 20 years, we've produced returns that are far superior to the average. There are times when we'll underperform because we're not led by the index, which is not the case for most fund managers. The experience of our clients is that in down markets, they tend to have far smaller losses than they might from a typical manager. And it's the repeated performance of protection in down markets, good performance up markets, that's allowed us to build a remarkable record and indeed our business reputation. The last 8 years have been remarkable because we have a world that has been going through a whole lot of massive changes. And so we have been building up the team in anticipation of this all changing. So there's a very large component of our effort goes into Asia. And over time, we think it's very wise to get access to the diversity that you get from global investing. Thank you.
What I love watching is people who have been in something who are still willing to change and are still willing to grow.
Yep.
They're not so fastidious in it's my way or the highway.
Yep.
Kerr, you're investing in global shares. Now that's a huge market with a lot of different companies and stocks.
Yes.
I think it's important for Blair and other investors that they understand the resources that you and your team have. How important is it for you and your team to actually physically travel and visit those companies, view their operations, meet with company management?
It's very important. Not everyone believes that. We think it's important because what actually happens is when you go and see these companies, and incidentally, the amount of information they're permitted to give now has tightened up a lot. But where the value lies is getting ideas about competitors, getting ideas about new advances in science and so on. There's a service available in both Asia and the Western Hemisphere to tap into the ex-employees of companies. So these can be the former CFO or the CEO, and we'll talk to the ex-CEO of a company. But it's not so much about the business we're talking about, it's about the culture, it's about the decisions they made in the past, why they did these various things. And that gives you huge insight because, as I said at the very outset, it's about the psychology of companies and human interaction that is so important, not just the numbers. Because if a company goes off on a tangent, you need to understand what they were thinking of, and it can give you warning about that business, but also its competitors. I can't stress enough, it's not about next year's earnings. It's very much about what is the direction this company is taking, where is it really heading, why will it become a bigger and stronger business in the future than it is today? Because that's what we're trying to do, remember. We're trying to find a bigger and stronger business of tomorrow. And you can obsess about today's price and today's news, and that's why we talked so much about human behavior and extremes of optimism and pessimism, because it's the short-term variables that make the opportunities. Companies get over-depressed as they do get over-elated. You know, investors get carried away in both directions, and that's what we try to exploit all the time.
You talk about not following the crowd, but sometimes the crowd can be right for a fair while before they're wrong.
Yes.
How do you think about that when you're putting the portfolio together, when you're worried about the market environment?
It's a very difficult question to answer because we've had an unusual long period where there's been one single market that has distorted the returns on indexes. We still monitor ourselves against the index, but what we're really doing is looking at each of our decisions and observing where we've either made a mistake of analysis or paid too much for something. And that's what we really look at. Was there enough margin for error when we bought this thing? To what extent were we gilding the story? Because when you go against the crowd, you need to be very objective in not changing the storyline because it's not working out in the near term.
So I'm presuming you don't necessarily measure your success compared to an index. How do you really measure your success? Presuming you don't necessarily measure your success compared to an index, how do you really measure your success?
What we do, unfortunately, and it's a burden, as I said earlier, when you've had an index that's been really a mono market index, but we think that'll change. Normally we'd have trotted out 3 to 5 years, but because of the unusual environment we've had for the last 8, where you had basically the whole Western banking system fail. So were there not other changes in the world where Europe is now starting to grow quite strongly and Asia is strongly coming back, we'd be starting to say, look, we're on the wrong track. But where you can see identifiable changes, where profits are growing again and economic activity is stepping up again, and particularly profit per share is going up again, you know you're on the right track. So it's a very unusual period of history.
You mentioned just before, Kerr, about the margin for error. Can you explain that a bit more to help Blair understand what exactly that means in the context of your portfolio?
When you're looking at stocks, you must appreciate that with the internet and everything else, there's never a shortage of information. The gap between perceptions and reality lies in interpretation. So the margin for error is observing where the perception about a company is completely different to the underlying reality. And if you're wanting to buy a company, you want to see that the majority of the market do not appreciate fully all the fine points of that company because they're so caught up in the short term. The margin for error is a gap between what you think is the intrinsic value and the current share price. What we're trying to do is find stocks that will go up almost regardless. And when you're shorting stocks, again, you need a certain creativity to see why what looks like a perfect company today could deteriorate. And so what we've talked about earlier is about expanding your time horizons and ignoring the very short term other than a reference point, not as a decision-making point.
I'll have to get an understanding of what shorting stocks is.
Yeah, well, hopefully the Guardians ask him that question because it's actually more complex than you'd expect.
Yeah, okay.
Can we just explore shorting stocks where a lot of investors wouldn't understand what that means, how you can sell a stock that you don't own.
Yes.
And it's part of your strategy that's very valuable potentially when markets and stocks are moving down, your ability to make money on that basis. Could you sort of explain that to us?
This is good. It's like David's in my head.
The concept is that you find a company that you think is wrongly priced. You then, through different mechanisms, can either borrow that stock, find an owner who wants to lend it to you for a small fee, you sell it at this very high price that you perceive, and if your judgment is correct and the share price falls, you then buy it back in. Let's say you sold it at $10 and you buy it back in at $7.50. You collect that profit and you return the stock to the fellow who lent it to you. So that's the whole idea, and if you do it on an index, it's the same process. And the seller, incidentally, keeps the dividend, so there's another aspect to that.
For lack of a better term, but Kerr has such a wealth of knowledge. You know,
He does.
And that's obviously translated into wealth, but it's phenomenal.
In periods when you are not performing as well as the index, how do you, as a team, make sure you have the right processes in place to ensure that you're still on the right path?
When we do our initial research, we will write up the principal points that we want to see come through over the subsequent period. To the extent that those milestones are not met, questions start being asked, and then you re-examine your whole case. Once one of them has been missed, if 2 of them have been missed, you have to start taking some action. And so it's a failure to meet certain milestones that sets you on a new path, and you either eliminate the position or you double your position or whatever. So it's very much about the discipline around making decisions and recording why you first were interested in that idea.
Kerr, thank you very much for your time today and sharing your insights on your portfolio.
Thank you for having me.
Thanks, Kerr.
Well, a bit of a different experience seeing Kerr present to the Guardians rather than the masterclass. What'd you learn from that?
The Guardians have grilled Kerr and they've considered his answers. Now, let's see what Blair thinks.
Bit of a different experience seeing Care present to the Guardians rather than the masterclass. What did you pick up from that?
One of the big things that I love is the psychology. So looking at how trends change and not following the crowd, because you've got to try and find what's about to come through and, you know, look at how people analyse it. That's just amazing. And for him, obviously, to be that sort of manager of teams like that, he sells a great game, and I think it's something I'd be very interested in.
I kind of thought he was good in his honesty about underperformance and...
Yeah, absolutely. I think he was very transparent with his strategies and his understanding of it. That was a focus of his, like he said in the beginning, and then they moved away from it for certain global reasons. If we focus just so primarily on our own soil, sometimes you can miss opportunities that are happening everywhere else. So I really like that point of view. I think it's a very important perspective to have for the future. So whether that's my own research now starting to ingrain in my theory, then that's the way I'm looking.
Well, we've heard from Care, lots more to come. Let's see what else is out there.
That'd be great.
Blair, this is a very different part of the journey now. I'm really excited to be introducing you to a friend of mine who not only is an incredibly senior woman in the insurance industry, is someone who's going to open your eyes up to, I guess, a different part of the journey that you haven't considered yet. So, Pina, meet Blair.
Hello, how are you? Nice to meet you. Nice to meet you.
Too. I'm, you know, I've been on a bit of a journey so far with everything I've learnt, and I believe you're about to take me on another one.
Yes, I am, actually, and I think this one's going to be quite an eye-opener for you. I'm going to introduce you to a fan of yours. This is a young fan, but someone that I think you're going to be quite intrigued by, and she really will open your eyes up to the world of life insurance. Yeah. This is what makes my job worthwhile, because this is where I get to see the difference that we make in people's lives and within families, and how the world of life insurance can make such a difference and add such value. So I'm really, really looking forward to taking you to meet this little fan of yours.
Okay, can't wait.
Yeah.
All right, well, good luck, you two. I'm going to send you off. Don't get into any trouble, Blair. And I'll look forward to hearing, you know, what you've learnt when you get back, because, you know, this isn't a professional investor, so a bit of a different day for you.
Good. I can relax the brain.
I don't know. Let's wait and see.
So let's go, Blair.
To learn more about growing wealth outside of property, visit theinvestmentseries.com.au or download our free ebook on becoming an investor from leading advisors. Next week on Learn from the Money Masters, Blair will learn a new lesson from Gary Lawrence of Perpetual.
It's all about the culture of the business. It's about buying those businesses that have this really strong culture of hard work.
And Blair will surprise a young fan with an important story to share. Remember, everyone's financial situation is different. The information in this show is not intended as personal investment advice. We encourage you to find your own personal advisor who can help you with your own financial future. Visit theinvestmentseries.com.au to find out how.